In today's video, we have a interest rate expectations update for you. As I'm filming this video on October the 20th, it's been a couple of weeks since we made our first video like this and quite a bit has changed. So let's get into it. If you're new to my channel, my name is Koukun and I'm a realtor and I run a real estate team both in the GTA and the Niagara region. If you're interested in learning more about what we do, check out some of the links in the description below. Or if you'd like to book a quick 15-minute call, I have a link to my calendar as well. All right, let's get into it. So to start off, the big news in the last couple of weeks was that the CPI inflation data for September, which was released in October, came at a slightly lower than expected number. So it came down to 3.8%, which is down from 4% in August. And this slowing of the inflation rate was probably one of the factors that caused some of the changes in the interest rate expectations that we're going to discuss in this video. So overall, things are looking slightly more positive with the inflation rate slowing. It is probably a factor of the economy slowing, but that is still to be seen. But this was kind of the big change that happened in the last couple of weeks. So if you recall, or if you watched the last interest rate expectation video, on October the 2nd, when we filmed that, the expectation was anywhere from a 39% to a 65% chance that we'd have a rate hike between the day I filmed it on October 2nd to June of next year. So over that sort of 6-month period of time, there was a 50-50 chance pretty much that there would be 1/4 point interest rate hike. So this is what it looked like just a couple of weeks ago. And here is the update for you. So the change is somewhat dramatic. There is now only a 12% chance that there's going to be a rate hike by December. And I believe, have the next interest rate meeting at the end of October here on the 25th. So probably when you're watching this video is when we'll have news of whether there was a hike or not. But odds are close to 88% that there's not going to be a hike. And there's another meeting in December the 6th. So pretty much the data here is telling us that we can expect the next 2 interest rate meetings before the end of the year probably to result without a interest rate hike as of today. Now, obviously these things change. If we have inflation data revised upward, it can increase the probability. If it comes lower than expected or the economy slows much more than expected, we may see a cut even sooner. So keep in mind, this is everything just as of today. This is not a prediction as to what will happen. So, and this huge good news with this is we've actually seen the June expectation go from a positive 39% chance of an increase to now a 38% chance of a rate cut from here. So that is a fairly dramatic shift in the other direction, meaning that even though there is still a chance of a rate hike, the odds are that the chance of a rate hike ends by next March, which is kind of when the spring market starts. And the market is expecting, a 38% chance of a 1/4 point decrease by June, with a September rate cut increasing to 30%, but it's a 30% chance of a 0.5% rate cut. And what this means is when it's a 30% chance of a 0.5, the expectation is a 100% chance of a 1/4 point rate cut. So overall, this is fairly positive news, at least when it comes to what we can expect for the next year. It's still not guaranteed that we're going to see a booming real estate market next year, but things are looking in the right direction. As I said in the last video, the next few rate pauses are probably not gonna spur the market the way that it has this past spring in 2023, just because what we saw was 2 rate pauses, the market went crazy, and then all of a sudden we had 2 more rate hikes. My expectation is that we will now need to see an actual rate cut before people start feeling more positive again. At least that's what my expectation is. We'll have to see how it plays out. So yeah, pretty much based on this data, it is looking more positive. The odds are over the next 6 meetings between now and next June, we're not going to see a rate hike. It's only a 12% chance of one, with the odds, going up now for a rate cut. And this is interesting. It's the chance of a 1% rate decrease has sped up to mid 2025. If we look at the previous data, it was close to the end of 25 and almost March of 2026 when the expectation was to have a 1% rate cut. So overall, things are looking more in the positive direction when it comes to basically these interest rates stabilizing. Keep in mind, even after a 1% rate cut from where we are at today, you're still going to see mortgage rates in the 5% plus area. So if you're someone with rental properties, or if you have a mortgage that's a variable rate mortgage like myself, it may be still prudent to think, can you hold on to, the properties and make those mortgage payments at a north of 5% interest rate? Maybe what we're seeing now could be the end of the worst of the rate hiking cycle. Again, many people have predicted that and they've been wrong in the past. But if the expectations are correct, then that's what the expectations are telling us at this point. But even with the rate cuts, they're only pricing in a 1% rate cut in the next 2 years. So just some things to keep in mind. I hope you found this video helpful. I'll leave the link to this website in the description below. But as you've seen, I've taken screenshots now of them because these numbers change almost on a daily basis. Now, the bigger changes only happen when there's some interest rate announcement or there's a news about GDP, etc. But pretty much I need to start taking screenshots of this so that we can have this as a little record. And even these videos will act as a record that we can kind of see how were the expectations in the past and how did it actually play out, and basically use that to guide just some of our decisions when it comes to choosing a variable rate mortgage, fixed rate mortgage, or whether to buy or to sell. So hope you found this helpful, and if you have any questions, feel free to leave them in the comment below, or you can book a call using the calendar link in the comments below. Until next time, all the best.